You want a bulletproof way to get out of the rat race in 2024? Well, in today's video, I'm going to give you my 3-step escape plan to get out of the rat race and beyond, and doing it on your own terms. Let's get to it. Everybody, welcome to my channel. I am your host, Leo Landaverde, business broker and commercial lender, helping you buy and scale a profitable business. If you are a small business owner looking to get out of the rat race, a frustrated real estate investor, or an employee sick and tired of the rat race wanting to get out, you are in the right place. Please subscribe to my channel and don't forget to hit the bell, and you'll be notified every Thursday when new videos come out. You get out of the rat race at the intersection of 3 concentric rings. Imagine 3 concentric rings, and at where the place where they meet, that's your get out of the rat race card. So let's look at the first one. Visualize. First one is you. You is the first component, and when I'm talking about you, it's about your skill audit. So I'm going to ask you a series of questions right now that you need to sort of brainstorm through, because you are critically important in a business acquisition. You are the CEO. So think of it as in terms of the seller is going to want to know this, the lender is going to want to know this. If you're talking to a broker, the broker is going to want to know this. Everyone you come across that has anything to do with a business acquisition will want to know this about you: your management experience, your operational experience, if any. What industries do you know a lot about? There's usually Your sweet spot is usually 1 or 2 degrees away from something you are currently doing, that you're good at, that you get paid for, or some skill passion that you have, or a hobby that it is potentially very lucrative. So what do you enjoy? So what are you good at? What do you enjoy doing? And you marry these things together and you start getting in the right direction. So you are critically important to understand that, because as a broker, when I am trying to analyze, and sometimes I get an email from a potential buyer and I only have about 10-15 seconds to scan it and get a feel for the kind of buyer I'm dealing with. So the more information you give me about you upfront, the easier it's gonna be for everyone. You are marketing first and foremost yourself. So you and the skill audit is critical. The second portion of this second concentric ring, it's going to be your equity injection, aka your down payment. Now, it's going to be important if you're trying to do a 10% down or a 15% on an SBA loan, because if you have 100,000, you divide that by 0.1, you get $1 million purchase price. That's just the beginning. There are additional costs that are associated with buying a business, most of which are actually factored into the project that gets financed. So the project is $1 million and the purchase price is $1 million, and there's another 3 to 5% add-on to the closing costs. Those get factored into the project and you come up with 10% of that. There is how much money you have divvied up into your down payment, access to additional cash. It doesn't really have to be cash. It could be a line of credit. It could be business credit, readily available cash in case you don't get working capital. And lenders assume that you're not going to have working capital, that they're going to have to give it to you. So if you can show some way that you have some working capital in case you need it, is there. Stuck in trying to figure out how to buy a business. Should you talk to the lender first? Should you start looking for deals? Should you get pre-qualified? Should you be looking at cash flow, post-debt service cash flow? Should you be looking at cash on cash returns? What do you look for? So if you need help, I'd love to help you figure out where you are in your journey. It makes sense for us to work together. I have a great mastermind, a group coaching program that I think you'd be a great fit if you go through our process. So reach out to me. You can email me directly. Email address is above, or you can just drop me a comment below and let's connect and begin that journey together. And also, the more money you invest in a deal, the most likely that the seller is going to inject too. So at the very least, to be considered a serious player in the acquisition space, 10%, it's sort of the norm. If you are coming up with 10% equity injection on a project, the seller will be more inclined to match your 10% with another 10% or even go 15%. And the lender is going to come up with a difference. So you see that 10% from you, 10% from the seller, and then 80% from the lender. Depending on how, well, I'm going to get to item 3 pretty soon here, which is the third part of this equation. It's going to determine what percentage of whom is going to come. So, and let's get to number 3. So think about the third concentric ring. It's cash flow. Let's not forget that the thing that you are buying is a cash flow stream. It's a fragile ecosystem made out of seller discretionary earnings, which is the net income of the business you're trying to buy, plus some discretionary expenses that the owner runs through the business. And a lot of people have a hard time understanding what cash flow is. So when you're looking at a business on businessbroker.net, BizBuySell, and hundreds of other websites, the Sunbelts, the Transworlds, the business teams, all of those websites, when somebody's talking about cash flow, sometimes cash flow gets confused. It's sort of a blanket term for seller discretionary earnings, EBIT, EBITDA, adjusted EBITDA, could be just plain net income from a profit and loss. So understanding cash flow, it's key. And understanding what add-backs are added into it, it's key. Case in point, I just had an HVAC deal come through my desk that I'm analyzing for someone. One of my students already did the work, and I'm actually double checking the work against source documents, aka tax returns and interim financials. And there's a gigantic gap between what the seller thinks the cash flow is in the business and what we think the cash flow in the business, and it's actually half. They're saying that we have $500,000 worth of cash flow. We're saying they only have $250,000. If you're trying to buy a business on a 3 times cash flow, or in this case, we're gonna say seller discretionary earnings, we can only come up with $250,000 worth of seller discretionary earnings. The seller says that they have $500,000. So if they want 3 times that cash flow, that would be $1.5 million versus 3 times $250,000, that would be $750,000. Either somebody's lying, right? Either the seller is not giving you the truth or you're not calculating the numbers right. We teach how to bulletproof the way until we look at the numbers, always falling into financials. So not to get too deep into the conversation. So to keep it simple, if you were to write on a sheet of paper, you just draw 3 circles, and you as one of them, your equity down payment is the other, and you got the cash flow. Right at the intersection of those 3 is where you got yourself, you get out of the rat race cars. Now, to just make sure that you understand what we're talking about is getting out of the rat race. It means that you have the choice, if you buy the right cash flowing business, depending on the post-debt service cash flow, to have a choice whether you stay on the current job that you have, you manage it part-time, you manage it full-time, and you get to eventually transition so you can grow this business into a much bigger multiple than the one you're buying. Because in business acquisitions, you don't make money when you sell, you make money when you buy, because you're gonna buy right. Hopefully that's helpful. You can totally do this. Get out of the rat race this year. Thank you so much for watching. A treat for you. For a limited time, I'm giving away my cash flow calculator, which has been retooled. It has all the latest tools and gadgets you need when you're analyzing a deal that you want to buy. And I also have my business buyer's checklist, which is 6 pages long. These are gifts from me to you to help you in your journey. All you have to do is click on the links below. It'll be in the comment section, the pinned comment that I have, or it'll be actually in the body description of this video. Please download them. You will need them. Thank you.